Good afternoon, students. So here in last session, that is in session 62, we have seen the effect of liquidation on the shareholders and the creditors. Here creditors means preferential creditors, unsecured creditors, workmen, etc. So here in last session we have studied the how the liquidation affects give effect to shareholder and the liquidators. Now in current session, that is in session 63, we will study the adjustment of rights of contributories. So here we have seen in the last session the number of contributories. So here a member may be a guarantee, or he may be a shareholder, or he may be the member who is having the membership of the company prior 1 year period of membership, and also the past members we have seen, those who are the contributories. So here adjustment of rights of contributor. Here we will study the adjustments of rights of contributories after paying off all the liabilities. If there is any surplus, after paying off all the debts and liabilities, now here the question arises about the surplus. It will be paid shareholders of the company in liquidation. Here, if any surplus remains after paying all the debts or settlement of all the parties, thus that surplus is utilized for payment to the or distributed among the shareholders. In case of compulsory winding up, the code fixes the respective rights of the contributors among themselves. Here, when the winding up is compulsorily winding up, means compulsory winding up means the winding up takes place according to the order of court. So here, when the court orders to wind up, that time the court fixes the respective rights of the contributories among themselves, and the surplus is distributed accordingly, and the surplus is distributed according to the order of the court. In case of voluntary winding up, preference shareholders are paid first in respect of capital and arrears of dividend. And here, if it is voluntary winding up, if there is a compulsory winding up, the winding up should take place according to the order of court, and all the activities takes place according to the order of court. But when it comes to voluntary winding up, that time first the preference shareholders are given priority for the repayment of capital and the arrears of dividend. Next, when equity shares are partly paid up and creditors or preference shareholders have not been paid, call will be made on them to pay the fee amount. So here, if the shares are partly paid up shares, that time the call will be made to the partly paid up shareholders to pay the balance amount. If there are fully paid up shares and partly paid up shares, suitable accounts have to be called up to make sacrifices equal or proportional what his shares are of different denominations. So these creditors are paid in prior to the debenture holders, but according to the prescribed form, the creditors are shown after the debenture holders. For calculation of commission to liquidator, these creditors are included in unsecured creditors. At the time of calculation of commission to the liquidator, the creditors are included in unsecured creditors. So here unsecured creditors are preferred at last. The preference for the unsecured creditor is given at the last, after payment of all debt and payment to the preferential creditors. These unsecured creditors are paid. Next, calls in arrears and calls in advances. What do you mean by calls in arrears? So here calls in arrear means before making payment to the shareholders, if there are any calls in arrears, should be collected first by the liquidator. Here at the time of liquidation, the liquidator will collect any due amount from the shareholder. If the shares are partly paid up shares, so that partly amount should be collected by the liquidator. He will first call the shareholder and ask him to pay the balance amount, and such amount is collected first by the liquidator. Then calls in advance. If any amount of calls in advance, it should be paid before any return of capital. So here, if any calls in advance are collected, such calls in advances are to be paid first before returning their capital, that is original capital. Interest on loan and debentures, etc. In case of solvent company, interest on loan and debentures are to be paid. So how the interest and loan and debentures are paid in case of the company is solvent company. When the company is solvent, that is the company has surplus after paying principal and interest up to the date of liquidation. The interest is payable up to the date of actual payment. Here, if the company is solvent, means it is having strength, or it is able, or it is enable, or it is having strength to pay all the debts, that company should pay the interest up to the date of actual date of liquidation. In case of insolvent company, and the company is not able to pay any debt or any repayments, it is not having a strength to pay the all debts, that in that case the interest is payable to the date of liquidation. So up to the date of liquidation, the interest is payable. Contingent liability. Contingent liability may become an actual liability on the happening of the certain event. When liquidation takes place, here the contingent liability will become actual liability, and this contingent liability is shown under the footnote, as a footnote under the balance sheet. But when liquidation takes place, it is included as actual, it is considered as actual liability. Its amount should be included in unsecured creditors. At the time of liquidation, the contingent liability amount should be included in the unsecured creditors. Means here these contingent liabilities are paid at last. Arrears of dividend on preference shares. Here it can be paid before anything is paid to equity shareholders. So here arrears should be paid first. That is, the preference shareholders are paid first, capital, and if there is any arrears of dividend, so such dividend should be paid before paying equity shareholders. Debentures having floating charges on assets. After paying of preferential creditors, debentures having floating charges on the assets are paid. Here, first of all, the preference shareholders are paid, and preferential creditors are paid first. Then after paying the preferential creditors, next debentures are paid. So here next, cost of liquidation. This is very important point. Cost of liquidation. This is expenses of liquidation after secured creditors. After payment of secured creditors, cost of liquidation is paid. After secured creditors means preferential creditors. After paying off or after settlement of preferential creditors dues, then the cost of liquidation is paid. The cost of liquidation includes expenses of litigation, that is legal expenses, other expenses, and liquidators remuneration. So here the legal expenses which are related with the liquidation, and other expenses relating to the liquidation, and finally the liquidators remuneration. These are the cost of liquidations. These are paid at the time of liquidation, and these are paid after the settlement of secured creditors. Next, liquidators remuneration. Liquidators are rendering the services. Here they are appointed and their remuneration is fixed in the general meeting, they are entitled to receive commission for such services. Here, the liquidators are entitled for the commission for their services. It is called as remuneration for the liquidators. In case of voluntary liquidation, liquidators' remuneration is fixed by the members in annual general meeting. Here, if it is voluntary liquidation or the members' voluntary liquidation, at the time of in the members' annual general meeting, the remuneration of the liquidator will be fixed. In case of compulsory liquidation, the court will fix the remuneration of liquidator. Here, any activity in the compulsory liquidation will be takes place as per the guidelines of the or as per the orders of the court. Here, in the compulsory liquidation, the court only fixes the remuneration of the liquidator. So, the remuneration usually payable as percentage on collection, that is percentage on assets realized, excluding cash and bank. Here, after excluding cash and bank, the assets which are realized, on that some percentage is calculated as remuneration to the liquidator. Next, percentage on amount realized, that is surplus, any surplus on the sale of assets or surplus of from security or calls collected. Percentage of distributions. So, what is distributed? The surplus which is distributed among the members or the shareholders. On such distributed amount, some percentage is calculated as commission to the liquidator. Percentage on amount paid to in secured creditor. So, here there will be some percentage is calculated on the payment of secured creditors. Some amount is calculated and it is considered as commission to the liquidator. Percentage on amount paid to the preference shareholders as capital and amount of dividend. At the time of payment to the preference shareholders, their capital and dividend, on these amount, some amount is or some percentage of amount is collected as remuneration to the liquidator. Percentage on amount paid to equity shareholders. Finally, if the amount remains as balance and it is distributed among the members, that is equity shareholders, on that amount also some percentage is calculated as remuneration to the liquidator. In this case, the following points are to be considered. At the time of calculating the liquidator's remuneration, some of the important points to be considered. A percentage in collection in, that is percentage on assets realized. In this case, assets realized cases on hand and cash at bank are not considered. So here, at the time of calculation of percentage on assets realized, that time cash in hand and cash at bank are not considered and these are excluded. The amount of securities realized by the secured creditors is not taken calculation. So here the amount realized by the secured creditors means the secured creditors are having security on the assets. Only the surplus from the realization of asset is shown in credit side of the final statement. So here the amount of securities realized by the secured creditor is not taken for calculation. Distribution in secured creditors, the amount which is distributed to secured creditors, preference shareholders and equity shareholders, on these all amount some percentage is calculated as remuneration to the liquidator. While calculating remuneration on the amount paid, so distribution amount means the amount remaining after payment of all settlement to unsecured creditors at the time of unsecured, because here unsecured means these are the creditors which are paid at last, or preference shareholders or equity shareholders, whether sufficient amount is available or not for payment to the concerned items. So the following formula can be used for calculation. If sufficient amount is available, commission can be calculated on the amount payable into percentage of remuneration. If the insufficient amount is not available at the time, amount available for distribution is to be taken and multiplied with the rate of commission and divided by rate plus 100. So here, if the amount is sufficient, only amount payable is multiplied with the percentage of remuneration. And if the amount is not sufficient at the time of calculation of commission, amount available is taken and it is multiplied with the rate of commission and it is divided by 100 plus rate of commission. So like this, the remuneration of liquidator is calculated. So here we will study how the remuneration of liquidator is calculated with the help of one illustration problem. A liquidator is entitled to receive remuneration at 2% on assets realized and 3% on amount distributed among the unsecured creditors. The assets realized rupees 50 lakh 34,000 against which payment were made as follows: liquidation expenses 50,000, preferential creditors 1,50,000, secured creditors rupees 20 lakh, unsecured creditors rupees 28 lakh, and here we have to calculate the remuneration payable to the liquidator. Here, with the help of working note, we can calculate the remuneration to the liquidator. So first of all, we have to calculate 2% commission on assets realized. Here, in the problem it is given that total assets realized is 50 lakh 34,000. On that, 2% is calculated as a remuneration of liquidator. It means it will come 1,680,000. Second, calculation of amount available for payment to the unsecured creditors. Here, 5,34,000 was the amount. From that, we have to pay secured creditors 2 lakh, liquidation expenses 5 lakh. Then liquidators remuneration on assets realized is 1,680,000. So total you have to pay here 21,50,680. After paying all these remuneration and expenses and settlement of dues of the secured creditors, the amount available is 28,83,320 rupees. So now the balance amount is 28,83,320. Now we have to calculate the amount payable. So here first of all we have to calculate the amount payable to the unsecured creditors and preferential creditors. Here preferential creditors are to be paid 1,50,000 and unsecured creditors has to be paid 28 lakh. Means here total amount is to be payable is 29,50,000. But here the total payment is 29,50,000, but we are having only the balance amount as 28,83,320. So here it shows that the amount is insufficient. At the time of insufficient amount, the 3% commission on unsecured creditor is calculated as like this. So amount which is available is taken and it is multiplied with 3%, that is 3 divided by 100, and plus 3, that is rate of commission is added to the 100. So like this we have to calculate the remuneration of liquidator by taking amount available and multiplied with the rate of commission and divided by 100 plus rate of commission. From this we will get 81,980 rupees as the commission to the liquidator. So like this we have to calculate the remuneration of the liquidator. So here in this session we very briefly studied how the remuneration of the liquidator is calculated. So here I hope you have understood. Thank you.